Hello, this nugget looks at conditions precedent and closing. There are usually two sets of conditions precedent in a shipping finance transaction, ignoring new buildings which we look at elsewhere. The first set consists of the usual conditions precedent to any loan agreement, such as corporate authorities and payment of fees. These conditions need to be fulfilled before the lender arranges funds, so that if there's any delay in drawing the loan, the various provisions in the loan agreement dealing with compensation for the lender for broken funding costs will be effective. The second set of conditions precedent are those relating to the ship itself, which can't be fulfilled until the date of drawdown. We'll start with the most important condition precedent, the mortgage on the ship. There are a number of practical problems in arranging the provision of the ship mortgage as a condition precedent to the loan. Principally, the problem is that the borrower can't mortgage the ship until he owns it, and he won't own it until he's paid for it, which requires the lender to release the funds. So the seller will not sell till he's been paid, but also the lender will not pay until he has the mortgage. Additionally, the ship will almost certainly be changing flag, so she needs to be deleted from the old flag and registered on the new flag before the mortgage can be registered on the new flag, and none of this can happen until the sale's been completed. Add to this the fact that the old and new registers may be in different time zones, and that the payment will probably be in US dollars, so that New York needs to be open at the time of the closing, and the result is that arranging this will be quite a challenge. So, how can this square be circled? The closing procedure for a shipping finance transaction needs to be carefully choreographed in advance. Typically, it will be documented by a closing agenda, which will be agreed in advance, and which will specify precisely what needs to happen, where and when. We turn to that procedure now. There will be 4 simultaneous meetings for the transaction closing. One meeting will be in the physical location of the ship, where the existing captain will hand the ship over to the new captain when the transaction is complete. Another meeting will typically be in the office of the lender's lawyers. A third meeting will be at the existing registry of the ship, and the fourth meeting will be at the new registry of the ship. It helps that many of the common ship registries have consulates in the major shipping finance centres, and that the paperwork can, to some extent, as we'll see shortly, be handled at the consulate without having to have people actually in the country of the registry. Each of the 4 meetings has a separate function, each of which needs to be completed simultaneously. The meeting at the existing registry has to organise the discharge of any existing mortgage and the deletion of the ship. The meeting at the new registry needs to organise the registration of the ship and the new mortgage. The financial meeting has to authorise the payment of money, and the meeting at the ship has to physically hand over the ship. Many of these steps can't actually be completed immediately, but the aim of each meeting is to ensure that there's minimal risk of the particular step not being completed in due course. We'll look at each meeting separately and highlight any issues which need to happen after the closing. First comes the financial meeting. At this, all the signed documents will be presented, as well as all the conditions precedent, except for the ship mortgage and the legal opinion as to its registration. One of the many issues which needs to be agreed in advance of this meeting is the mechanism for making payment. It takes time, some hours, between authorising a dollar payment through New York, which is what the seller invariably wants, and its recipient being notified of its receipt. There are 2 common solutions to this. The first is to ask the seller and their lender to agree to hand over the documents of title in exchange for a payment letter from the seller's bank. A payment letter is an undertaking from the bank to make payment with value today. That would enable a simultaneous exchange of the promise to pay and the documents of title, but it does involve the seller and their lender taking a credit risk on the new lender. The second common route is to use an escrow account. Under this route, the funds are placed with a different bank, sometimes the seller's bank and sometimes a third party, in an escrow account. with written instructions that the money belongs to the lender until title passes, at which point the money will belong to the seller and their financier. This route involves all parties taking a credit risk on the escrow bank. Whatever the plan, it must be agreed in advance or the closing will not happen. The seller and the buyer also need to make arrangements to release the 10% deposit, which will typically have been deposited in advance and which needs to be released to the seller. They also need to agree the quantity and price of bunkers, fuel, on board, as that also needs to be paid for. Another point to mention in relation to this meeting is that the legal opinion will probably not be available at this stage, as the lenders will probably want an opinion that the mortgage has been registered, so of course that will have to wait. It's common to agree the form of opinion in advance and require an undertaking from the relevant lawyer that they will issue the opinion once the registration has been completed. Next comes the meeting at the existing registry. The task there is to get the mortgage discharged and the ship deleted. The lawyers will need to have checked in advance precisely what's needed to achieve this and what evidence the new flag needs to prove that it's been done. In some cases it may take a few days to get the ship permanently deleted, as the ship owner may have to evidence that all crew have been paid before that document is forthcoming. Provisional registration of the ship and her mortgage on the new flag is often possible without having a certificate of deletion from the old flag, but that certificate will usually be necessary for permanent registration, so that the buyers and their lenders need to be satisfied that this certificate will be forthcoming. For example, in certain circumstances they might require evidence that all the conditions to issue the certificate have been fulfilled. Having checked what's needed in advance, those present at the meeting will present the mortgage discharge and bill of sale, which passes title to the ship, to the registrar, and request confirmation that, if and when these documents are submitted, the registrar will discharge the mortgage and delete the ship from the register and issue whatever document has been agreed, such as a certificate of deletion. At this stage, the documents are not actually submitted for registration, as the meeting will be standing ready to proceed to do that simultaneously with the other meetings when they are also ready. Then comes the meeting at the new registry. The job here, of course, is to get the ship and the new mortgage registered. Once again, the lawyers will have pre-checked precisely what is required to achieve this. One thing to notice is that the registration will only be provisional. After the provisional registration, the new registration of the ship will need to be painted on her, and that needs to be certified by the Classification Society in order for the permanent registration to be obtained. It may also be that other documents, such as perhaps the deletion certificate, may not be required until permanent registration. It's also worth noticing that if the registration is being done at a consulate, as it often is, then it may be that the registry will not be effective until the details about the documents have been transmitted back to the home country and the relevant registration certificates issued there. Nevertheless, lenders usually don't wait for this to happen before authorising payment, as that would make the closing impractical, and the risks are perceived to be small. So, having investigated in advance what's needed, the people at this meeting present the bill of sale and mortgage to the registrar and request his confirmation that, if and when these documents are submitted, the registrar will register the ship and its mortgage, or require the home country to do so. Note, if the home country can disagree with the consul about the acceptability of the documents, this procedure would be far from risk-free. Once again, the documents are not actually submitted for registration at this meeting, as it will be standing ready to proceed to do that simultaneously with the other meetings when they are also ready. The meeting at the location of the ship deals with the physical aspects, including agreement on quantity and price of bunkers. When the financial meeting is ready, it will ring round all the other meetings, and when all are ready, they will each simultaneously complete their aspects of the transaction. The time will be noted on the protocol of delivery and acceptance, and a phone call will be made to the insurers to advise them of the time of delivery and obtain confirmation that the insurance has attached. Once the mortgage registration has been completed, the legal opinion will be issued. In practice, the loan agreement doesn't go into any detail on this, but usually requires all the documents as conditions precedent. It should be noted that actually the conditions precedent aren't met at the time the money is advanced, although in each case what this procedure seeks to achieve is a situation in which there is minimal risk of the condition precedent not being met, and to ensure that the remaining steps are all mechanical and fairly automatic. This is not the same as agreeing to a condition subsequent, which would involve a far greater risk. Agreeing that provision of the mortgage or its registration was a condition subsequent involves the risk that the borrower fails to execute the document, or that the document is not acceptable for registration, so that the lender is actually lending unsecured. The final point I'd make in relation to closings is that the documents really ought to specify the time of day by which the closing must have happened, since the lenders will be unable to transfer dollars after a certain time of day. If the documents don't specify this, there's a risk that the borrower fulfills the conditions precedent too late for money to be transferred, and that therefore the lender is in breach of its obligations to advance funds on that day.